Here we go. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money you cannot afford to lose. You should always be aware of the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any questions. This is Thursday. We're going to be going until about 9:50 this morning, roughly 9:50, 10 o'clock. This is a live trading room. It's for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during the session is not a recommendation or suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies rules for entries, exit targets, and risk management. And now that we got that out of the way, let's go to the charts. And I've got a New Zealand US trade in progress right at the moment. We had the alert. Can everybody see my screen? First off.
Yes.
Okay, good. We had an alert this morning at for the New Zealand US, and that was at 6:30 this morning. It's still kind of in play. I got into it a little bit earlier. I'm still in it. Still waiting for it to totally break down. I did get in a little bit earlier. I got in off of this little, basically the alert was right here at 6:30. And you can see there's like a little bit, a nice move down, and then there's like a little bit of a flag pattern right here. Here's where the alert happened. So I drew my wedge pretty much from the top of, there's a couple different ways to have done this one, but it was a descending wedge. So I started my A up at the top. I could have used this point and this point for the alert. But by the time I actually got here at 6:30, it's already broken through the top of that. So I decided to use this as the A. And right now we have a secondary trend. And you can see where this is the top of the trend line. Here is where the alert came in. So we actually had a trend line from here. If I can get this thing drawn. We actually had a little bit of a trend line from here on down. Here's where the alert, it broke up out of the top. If you had taken this right at the break, right when the alert was given, it got up to 65.41 from the break at 65.34. You have basically gotten your 7 pips out of that, but it would have been tight, and then came right back down into the wedge, and it's actually breaking out of the bottom. As it broke out of the bottom, one thing I was looking at is seeing where these RSIs are at. And if they're already at the top like this, that's usually where they're at the extended range. And you can see they kind of go from the 89 to the 11, the blue one does. The orange one's not, which is the 8 period, isn't quite as aggressive because it's a longer time period. But when I drew this wedge from here, using this AC as my main top of the line, let me take this one out of the way. You can see that it actually had a secondary trend from here to here, from here by B. You can see it had a nice little trend coming up as in this area right here. And you can see where the bottom of this blue candle kind of aligns with the top of where this thing dropped down, came back, wicked up. So this is now the new secondary trend, but this is still, I'm still looking for it to break out of the bottom of this B area. This is this is the main area of the original wedge to break down right around in this area. We can put the D back up in here. And you can see I'm still looking for it to break. I got into a little bit earlier, but I'm looking for it to break the bottom with a closed candle, which we may be pulling into right now. Let's see if I can get my charts up here ready to go for if this thing does break again. This would be a secondary entry that I'd be able to get. And right now it's moving in the right direction. We have all of our RSIs, or the RCS tool. It's all looking good for a short. We have a 3-point spread here on the US yen, or excuse me, on the US New Zealand, 3-point spread over here on the 5-minute. We're getting the break right now. If we can get the close below this, maybe followed by a blue candle coming up to retest this line right in here, we may be able to get another entry into this trade. So I would say, and that's what I'm looking for right now. All of our moving averages are in the right direction. It's been going sideways ever since about 6:30. It's been trading in a very tight range, but it's been, there's this red candle right now on our 1 minute chart. It didn't close below the line. It closed right at that line. We do have some weakness coming in here. This is still showing strong to the weak side. And let's see if I have my charts up here, if I can get my trade charts up. Here we go. Wanda. See if I can get this thing set. And we're going to look for a sell on this. I still want to see a close below this trend line. It may give us not give us a great entry here, but we'll see. We still have 1 second. There we go. And new candle. I'm going to go and enter this trade. And we're looking for a 7 pip target. So we're going to, here's where our fill was. And we should have our protection. Take profit. We're going to say 7 pips. And actually hopefully maybe it'll give us a little bit more than that. 7 pip target, 7 pip stop. We'll see where that stop puts us. Here's our target right down here at the bottom. And let's see here. Right now, we're going to move this down to where we entered. Actually, we don't need this because I can show you where the stop and losses are. I'm just going to take this off because it just adds a little bit more clutter to the charts. And so right now you can see that we have, this was the original wedge. I'm going to make this yellow area. This was the break of the bottom of the wedge. We did have some possibilities, some early entries in here. That was before we started this morning. But right now we have the break. So we're looking at and see where our fib lines are. You're seeing we broke right here at the blue line, and I'm looking to come down to, at least this red line should give us, actually it's going to be halfway between the red line and the green line is where our 7 pip target is. I like to keep my stop above the green. I'm going to move this up a little bit here to this green line, because if things don't work out, and then this is going to be a 10 pip stop on this. I like trying to give it lots of room. I would be out before the 10 pips. If we get a crossover and comes up and breaks through this 62 on the 1 minute chart, then I'll close this trade out. Right now it's retesting the blue fib line. This is a strong price of 62.25. We have a nice little trend developing right off of this on this 1 minute. We have a high, a low, a lower high, a lower low. It's actually developed. It's following this trend right along this yellow line and between the white and the yellow. It could come up and retest this. I'm going to draw this line right here. Here's a line. You can see where we have an anchor. Here's a hit. Here's the third hit. And so as long as it can stay below this, if it breaks above this, I may just close this trade out. I'm already profitable on it. This one is marginal as far as we don't know where it's going to go with it. I guess that's the point. All you can do is play what it gives you. I'm going to go on a 5 minute chart, spread things out a little bit so you can see a little bit better. It won't be quite as anxiety provoking. You see we have from the D, we have a little hit right here. What I'm going to do, I'm just going to align the C with that. I'm aligning the C with the wick here. Here's an anchor. Here's a hit. We don't have the third hit, so right now it's still going down. And we have the break. We did have the break on the 5-minute. It did not close below this B line, the BC area, as I just basically flattened this out. And I was looking for a close. We did get the close on the 1-minute. We didn't get it on the 5-minute. And we still have another 4 minutes to go before we get that close. But we did get the entry, and I'm still okay with that. You can see where it's so far still respecting this yellow exponential 13 moving average. And like I said, down here's where our target is. If I put the fib lines on, it should be it. Here's the, right now, this was the red fib line. This is 21 pips apart from up here to here is 21 pips. We're just trying to get 7 of it. We're just trying to get 7 of that 21. Let me just see what it does. Right now, it's still in our favor. We still have the dollar strength. The RSIs are still in below the 40-60 range, still pointing down. The orange one hasn't gotten down to the 11 area. This one could come back and hook again, but right now our whole moving averages are all showing red, so that's showing that it's as being a short. So right now everything's in our favor. We're in the trade, and we're still just waiting to see if we can get our 7 pips out of this one. Any questions so far? If you have any questions, put them in the question answer box. And oh, Eva, I see you're in here. Well, let me get you over here into the panelist corner. And I'm going to allow you to talk. And you're unmuted. There you go. Good morning, Eva. And where's Christine? I got to get Christine in here too. And I got to get Christine in here.
I'm here.
Oh, panelist. There you are. Now you're a panelist. Unmute you, and we're good to go.
Morning, everyone.
Morning.
Eva, did you have you must have had a hard time getting in as well, didn't you?
Yeah, I did. I actually messaged you to let you know I couldn't get in.
Okay, yeah. You know, usually when it's about 5 minutes before and I don't see anybody showing up, either one of two things: either no one can get in, or everybody's losing interest. So I was hoping nobody could get in, and I.
Well, if I can't get in, it's because I can't get in, not because I'm losing interest.
Okay. I appreciate that. And so anyway, yeah, I don't know what happened. Either I don't know, maybe I clicked on the wrong link and didn't realize it. We had a good session last night. It was a small crowd, but it was a good session.
Oh, good, good.
Yeah, it was really good.
And so anyway, right now we're in this. There was some other alerts, but right now we're in this. So I don't like to take. It's hard enough to do one at a time, so we're just going to do. I did check the news, and right now there are no red folders today that I see. If you look at this, you'll see basically this is the news, and everything's yellow. There's a couple orange folders at 8:30 with the for the U.S., but unless it's a red folder, I don't pay too much attention. Although we might get a little bit of volatility around 8:30. We may expect maybe we'll get a few alerts. But right now, if everything works well, we'll probably be done trading after if everything works out well, in about another 2 minutes, we should be having our 2% for the day. We'll just keep on letting this thing run, and we'll see if we can get our target. And let's see, open up the question answer box and see if there's anything that's. And so if you have any questions or comments, you can raise your hand and or preferably just go ahead and put a question in the question answer box. And if we need more clarification, we can turn your mic on and see if we can get some interaction between everybody. So I'm glad to have everybody here, and hopefully you're learning something. One thing I've taken notice a little bit as we do more of the, let's just say everything is always a constant learning experience, and as the markets change, we have to try to adapt to it. And what I was finding out in the last couple of weeks, it was getting really hard to get the 7 pips off the breaks the way I was drawing it. And as these trades develop, I'm becoming more and more of being okay with moving these points after the break. I draw it with the original intent, but especially when you get an alert and it moves right away, right out of the chute where the alert was. I mean, you should be able to get it within, unless you're sitting right at your computer, you'll miss those entries. So once it comes up and then it comes back into the wedge, I'm really okay with moving this, moving like this up to the. Let me see if I can do it here. Moving the C. Like originally the C was down here before. We had an anchor, we had a near hit, here's the break, here's the break up, came up, here's our 62 moving average. Then it basically came right back down into where the wedge would have been. And so I'm okay, and as you see it's starting to break, I'm okay with moving this thing up here and developing another trend line using this CD area as a trend. We had the break. Keep it flat across the bottom. Here's the wick. So tested it, came back up, gave us another pivot high, a little bit lower than this one. So I can use a C. Here's the midpoint. And now we can use this D as a continual trend into this direction. And as long as I have 2 points now. I have this point up here to a trend line. I have a point here, the B, to where if this thing bounces, it should stay within this wedge right now. And if it breaks out of this wedge, then it may be time to get out of the position. Maybe there's my 7 pips. I'm going to close that out and I'm going to call it thank you for the day. But this one's still in play here. Right now, we basically, if we got in at this area, this is where we took the trade. Let me get on the 1 minute chart here. We actually took the trade on the red candle break, came up, retested this little trend line right here. But here's where I clicked the button, here's where I got the fill. We have a 1.3 point spread, and if you'll notice in the evening, you'll find out these spreads seem to be a little bit wider in the evening because there's less volatility. So keep that in mind. That's one reason I like trading earlier in the morning, right between the London and US session, because a lot of times the spreads are just a little bit better and a little bit more favorable. But right now, here's the area where we got in off of this candle. Here's where our fill was, but right now we're still okay. It's still maintaining this trend line, still maintaining the 62, and it's still coming on down. And so we're still looking at getting it. We're still looking for a target here. If I go to a higher time frame to see if this target looks valid, other than for like a Fibonacci line, which is right here, you see, right now I've got this right in between. The 7 pips is right in between this red and this orange, or this green, the green line. And it's still within, and actually still going short. It'd be interesting. We'll see if it breaks this trend line right here, which is now the new bottom of the wedge. There's the break. We're just getting very close to our 7 pips. One little more push, and now remember, it has to come down. And it has to go 1.5 pips below this line right here in order to get filled. So if it comes down anywhere within striking distance of that, if it doesn't take you out by itself, you may just want to go ahead and close it out yourself. See, it did not take me out yet. It's right at my target. It's got to push down 1.7 pips below that where my profit target is in order to get filled. And that's close enough. I'm just going to close it out. I'm done. And that was your trade of the day right there. Any questions so far? There's a question about the orange line is a period 3. No, the orange is a period 8. The blue one is a period 3 on the RSIs. And then, so basically I have, what I'm really interested in, I've got the two blue lines on either side. This is the 89. This is the 11. And the blue line is the 3-period moving average. The orange is an 8-period RSI. It's reference to the 8-period RSI. And then the orange lines in between the middle here, this is a 60%, and this is a 40% retracement. So basically, I'm really looking at trying to get in to go short up in this area. I'd like to see this 3-period get up into the 89 and then hook. I like to see it get down to the bottom of the 11 and then hook, and that's where I like to try and get in. If I want to stay in the direction of where the trade is, in this case, with the strength of the currencies, is basically right now the strength of the currency is still, the dollar is still stronger. But you can see here where it's actually lost some ground here on this. Right now, it's fighting for last place in the scheme of things. If you look at the overall RSI or the other let me see what I'm trying to say. The RCS tool. Let me get that up here. I'll show you this. I'll be able to show you a little bit what, if you're new to this, you'll see what this is all about. Here's basically, this is the RCS tool on 4 different time frames. I have a 4-hour chart. This one down here in the gray is my 30-minute. Over here is my 15-minute chart, and then up here is my 5-minute chart. And what I do is I put this up. I'll just make, if you just click on the indicator that you want, if you just click on that twice, it just blows, and you just see just the indicator. And that's what I'm doing here. I'm just blowing this up, so all I'm doing is seeing these RCS tools. And if you can see where the dollar is right now on the 4-hour chart, the dollar is the strongest of all the 8 currencies. It goes from 0 to 7, which is all 8 of them. Right now, the dollar is the strongest of all. Over here on the 30-minute, from the 4-hour to the 30-minute, it dropped from first place up here to being the strongest to the bottom 3. And you can see it's at the bottom 3 on the other lower time frame charts. So from a higher time frame, the dollar is strong, and so on this pair of the New Zealand US, it's still reference to a 4-hour chart is still strong. But you see it's starting to lose ground on the lower time frame. So this thing's probably working its way out. It had a nice run overnight. Here was the overnight, the close. This was the open of the new day. It went sideways for a while, wicked up, wicked back, and then it started its nice trend down. And now we're getting near the end of the Asian session. So to see it starting to, the dollar to start losing some of its strength is not totally surprising. But right now it's still holding the 15-minute, it's still tracking down, it's still respecting the yellow moving average. And we're just now, but we made our target. We made our target. Now we can move on to, either you can still keep on tracking it as long as it stays below the yellow, you're still good. But the problem you would run into is if it comes back and tests it, you're giving up 15 pips right now. It's right now it's at 65.14. You'd be giving up 15 pips. And if you're only looking for a 7-pip target, you'd be giving up twice as much as what you were targeted originally. If you took 2 positions, you can let one run and just let it take you out at the time when it reverses back. And that's one way to stay into a trade a little bit longer, to maybe go for those little bit longer profits and a little bit no longer runs. Let's see if there's another pair we can look at. And there's a US yen at 7.15. Let's take a look at that one. Any questions so far? Here at 7.15, you can see that the yen is, let's see where we're at here. Yen was strong, second currency of the pair. And so if the yen is strong, we're looking for it to go short. Here was our wedge. And at the wedge was 7.15, it was an ascending, so I want to go from low to high. So here's my low, here's the high, here's basically where I would have started this thing. Looking at what the daily price action is, it was ascending, so I want to look for a lower pivot to get to a hit where the alert was. You can see here's an anchor, here's a hit, here's a low, here's a high, here's a lower high, here's a higher low, lower high, higher low. Here's my wedge. We had the break at soon afterwards, and right now it's still kind of in. Well, let's see. Right now we basically had the break on the 15-minute. So I didn't take this one because I was watching the other one. I only do one at a time. But you can see where here is your red candle break. Let's see. We're going to tweak this a little bit here. You can see here's a near hit. So we had the anchor, the A for the anchor. I tend to go a little bit further back. Sometimes I just maybe I go back too far, but I like to see I like to give it lots of room, and then try and maybe find an earlier entry in between where the alert came in. Here's some wicks here. I'm going to bring this over here. Here's I don't like having the candles on this, and you can see where it broke a little more. So I'm going to bring this one over down here. I'm still going to note this area. I'm going to note that with a little ray here, so I know where the top of this was, because that's an important area. And you can see where it's just sort of flatlined right along in here, and then it dropped again. So the B is also an area of interest from to the upside. And what I like to do is, there's a couple of different ways. One way we've been doing it is we've been drawing a parallel line to the bottom of the wedge to get 2 pips. Another way, which I think is almost even more effective, is to take my C area, which is close to where the wedge alert was, and I'm going to mark it and look for a close below that with the moving averages in the right direction. Moving averages are all in the right direction here, but you can see where it came back around. We got the close, it came back, retested, and it went back down again. This is 90, 84, and you basically had your 7 pips here as well. Pretty close. If you had gotten in at the close of this red bar, wait for the pullback, or you could just take your chance to get in. This is a pretty big candle to try and get in on. I would hesitate. If I didn't get in up here, I probably would not have taken until it came back and retested back in this area. You can see right now there's a lot of wicks in here. It's going sideways into a pretty extensive range. And if you're looking from here to where you would have gotten in, you could have, if you had a good entry, you could have gotten your 7 pips. You would not have gotten it if you got in on this red candle. That's why sometimes you have to wait a little bit. And if you miss the trade, you miss it. Sometimes if you get these really strong red candles like that, it's hard to get in. Now, one thing I would have liked about this one is I have my C here. I want to get the close, but you also see where your 1 minute moving averages have all consolidated right in here. And then you got the break. This red candle right here broke. You had the moving averages, the price came in, the green crossed the yellow. The 62 held. And then you had the close below, again, right here at the wedge. And you had your nice little pullback. This is a little wedge in itself on the 1 minute chart. And then once this candle came down and closed right in here, I would have been in this trade. Because now I have everything moving in my right direction. I probably still wouldn't have gotten filled till down right around this area. So I would have been looking at push the button here. May or may not have. You could have maybe had a sell order, a sell stop at this area that would have had you filled inside this range. But again, you kind of want to see that break And if you had 7 pip target, you probably would have been just about there. You would have gotten filled. You would have filled right into this area right now, and that would have taken you a grand total of from this candle to this candle would have taken you almost an hour, 55 minutes. And it's still going. How's our New Zealand trade doing? Is that still going too? Not so much. And the other thing you can look at for targets, if you go to a higher time frame, find out where on the left-hand side of your chart you had a strong move to the upside to see where your target, where this retracement, because it's nothing more than a retracement to some other upward move. So if you go over here to your 4-hour chart, you'll see where the candles are. You can see right here, this is where this big move, the last move from, this was from probably Monday, Tuesday, Wednesday, as Thursday came up, and now it's making this, it's retesting this area right in here. If you go over here a little bit further, you'll see that this move came up. This is where, again, this is where this move started. And what I oftentimes do, I'll look and see where the wicks are. And so I'll take my tool here. So here's where the wick is. I'm going to come over here, and I'm going to come over until I run into another wick. You can see that's, when actually you can see this is right now, this came in right to the bottom, came in, and then here's, so right, this area right in here is where the seller or the buyers came in to drive it on up to that room. So this area right now is a key area for a target area. Once it breaks through this area, you see there's some more wicks here. So this wick had a nice move up, came back, tested it, went up higher, higher highs, higher lows, came back down, retested this point right here. And you can see where it just came down, tested it, and it took it back off again. So right now, this is where all the buyers are coming in. And if you look and see where these wicks stop, like here's a wick right here, here's another wick, or right here. And now from this wick to this body, you'll see now it ran into a body of a candle. And here's where it hasn't been tested yet. This was tested into this zone, this was tested, it hasn't broken this. So right now, when you come over here to this side of the chart, from a 4-hour reference, it's got this area that has to get through before it's going to go any lower. So this would be your target area. Now, how deep it goes into this on a 4-hour chart is hard to say, but this is what we're looking at right now. So this is basically this is what I would consider to be a demand zone, which is where the buyers are kicking in to take it long again. Make this green to the demand. And you see it wicked down into here, it came back and rejected it. Now, thing is there a price point on a 15-minute chart time frame that may give us a Fibonacci line that would be of interest? And right now we see it's right about in the middle between these two Fibonacci lines. And if you look and see, you'll probably find a 5-minute one right about where it's turned around. If I go to a 5-minute chart, oh, excuse me, I go back to 15-minute. I go to my 5-minute chart, put the fib lines on, and let's see where they ended up. And here's the red one, and it's right about in the middle between the two. This thing could still retest this one. Basically came halfway in between. And it's still not totally done yet. It broke out of the bottom of the wedge, which still tells me this thing still may have some room to the downside. You can see it came right on up to the yellow line, couldn't close above it, couldn't close above this. So we have a little rebar right here, a so-called rebar. Here's where it broke. So that has to get back through. It has the 13 moving average, which it needs to get through. And then also once it breaks this trend line, it has to get up to break through this before it ever breaks to the top of where the original wedge was. So this is still, I mean, this is where your patience comes in. If you want to go for the longer move, you have to be willing to accept these pullbacks like this. But you don't want to give up your daily profit, your daily bread, so to speak, because you want it to go for that bigger run. It's nice to get those bigger runs, but if you can just get that one good trade a day for your with your 2%, it makes a huge difference. And let me see if I can show you about, just to give you an idea of this calculator that we have. For those of you who are new to this, what we're looking at, if let's say you have a $500 account and you use a 7 pip stop, 2% of your $500 account, you're risking $10. In order to risk $10 with the 7 pip stop, your lot size is going to be a 0.14 lot size. If you increase this to, say, let's just say you increase it to a 60 pip lot stop. If you're a day trader or a swing trader, you're still risking 2%. You're still risking $10. But look at how much less your lot size is. It's only a 0.02 as opposed to 0.14. So this is really your profit regulator. How much profit do you want to make? And if you want to shoot for a 7 pip profit, you can take a larger lot size for the same risk level, for the same risk reward value. So 7 pip risk, 7 pip loss, gain, you make $10, you still make 2% on your $500 account. You do that every day, you just made 10% on your account for the week. And as the account grows, it grows from 500 to 700, still using the same 7%, 7 pips. Now you're risking $14 to gain $14, same 2%, but now your lot size is not a 1.14, it's now it's a 0.2. So as you get better and better at this, you're taking larger lot sizes, but your confidence but grows slowly, so your confidence stays up. And then you just keep on adding money every time. That 2% just keeps getting bigger and bigger. Eventually, you have a $1,000 account, same 7 pips, same 2%, but now you're risking $20 to get $20, and now your lot size is a little bit bigger. And this is how you can compound. It's the slight edge, which is basically you just get that little bit of profit, keep on growing it little by little, and eventually, as you go 30 days down the road, it becomes very significant. Any questions to that? Now's a good time. This is actually working out to be a nice trade. It's taken a sweet time to make its profit, but it's been a relatively nice trade here. Our US yen. Let's say we already made our profit on this. If you had taken this trade with the same methodology that we use, and you have this thing came all the way down to, let's see, we got in up here. That would have been 13 pips. You have that's a 13 pip profit on there. That's twice as much. That's not just 7 pips. That's your 14 pips almost. So rather than making 2% for that, if you were stayed in this trade, if you're able to stay into it that long. But now you can see you also if you came back to wait for it to come back and cross your yellow, you just gave back up almost half of it. Now you're right back to where your original 7%, plus you had all this. And if you didn't take the profit, now you have the anxiety of saying, okay, well, how much more of this 14 do I want to give up? No, just take your 7 and go on to the next trade. And you'll find out it'll serve you well. Nothing that's more frustrating than having a nice little profit on one trade, and you go for the second, third, and fourth trade, and you give back all that profit. You give back the 2% you already made in the morning. You gave it back and then some. Then you go, why didn't I just stop trading? Well, and we're advocating, take your 7 pips, take that larger lot size, go for your 7 pips, be happy with 5 if you need to, put the money in the bank, and then go. And a lot of us as traders, we do this because we want to have a life. We want to be able to do something else with our time, but still be able to grow our accounts. And I find out that early in the morning, I'm getting a lot of good trades about 6:30 to 7 o'clock in the morning. And oftentimes by the time we open the session at 8 o'clock, I'm already done trading for the day, and I still practice. I still take the trades to make sure that the methodology that I'm using still works. And then what it does is just builds your confidence. So that things of how, as you watch these charts enough, it builds your confidence, and as it builds your confidence, it builds your bank account. And still give you the reason why you trade, so you have more time with your families or to do things you want to be doing.
We have a new alert, Al.
Okay, thank you.
US CAD.
Oh, our favorite
Our
pair.
favorite pair.
All right, so we're going to go to the US CAD. We're going to put that on.
It's descending, Al.
Descending, thank you. And that was at 8:45.
Yes.
So we're going to put this one up. We're just going to get our 15-minute chart, which is where we always start our trades. Let me see if I can get this thing working right.
Well, it's already breaking out of the wedge I drew.
So these things, I'm finding out that by the time we get the alerts, it starts breaking. But it's kind of a blessing and a curse, because a lot of times it's the whipsaw that gets you. Is that you see a break up to the upside, it gets you in, it gets you 3-4 pips to the profit, and then it turns right around and goes back the other direction. You say it was ascending, Christine?
Descending.
Descending.
Okay. There we go. Descending. So I'm looking. Okay, here's my daily range. So I'm going to draw the box. I'm going to bring it up here to the top where the range was, and bring it down. This is the range that we're working in from where the alert was. I'm going to set this to my range box. That's the white box, and you can see, like I said, prices are do one of three things. Either they go down, they go up, or they go sideways. Right now, it's going up and down inside a sideways range. So this is really the range is going sideways in, and we're trying to just get our 7 pips. Now, the question is, how much do we have here? We have from here to here. We have 30 pips, so there's a lot of range in this. So, and right now the price is right in the middle of the box. So you keep that in mind. So if it's descending, and remember I mentioned about the wicks. Here's a wick as I make this analysis here. Here's a wick. It was descending. Here's the lower wick. So this is probably where I'd want to draw begin the triangle. But as I look and see, now from this wick, I run into the body of this candle. This is going to be the next area that is probably going to be shooting towards, right up in there. And you can see that's probably going to be in the upper 25% of the box. But here's the descending, so we're going to draw the triangle. Here's my trend line from this one down to the low of the box, down to where the highest, closest I can to the alert, and then I'm going to tuck it in right down here. And you can see it's breaking out the top. So ideally what I'm going to be looking for right now is, we're not in this trade right now. I'm going to go to my lower time frame and tighten up the box a little bit. So I'm going to move my D over here. I'll move my C over here. And I'm going to see where this is hooking right now. You don't want to be getting, right now we're seeing, okay, we had a nice blue candle up, closed, second candle closed, red candle, now it's retesting. As this thing pulls down, if this thing hooks back up, then we could take the trade to the upside, because we're having a lot of strength here. The dollar is stronger to the CAD by 6, first currency of the pair. What I'm going to do on this particular case, I'm going to put a buy stop at 32.15. So I'm going to be looking at, I'm going to go right up in there. So if it comes back up, I'll be in the trade at a better point. And there's going to be a buy stop, and I'm going to move it right on up to, because right now if it comes, as this thing hooks down, you don't want to be buying, you really don't want to be buying when this thing's all the way up here. You really wait for it to pull back a little bit come back, test our 60-40 range, and see if it gives us another hook, then I could maybe move my entry. If this thing comes down and hooks before it changes my entry here. Oh, we're already in the trade. That's why it already filled me. As soon as this thing came down, as soon as it came within 2 pips, it got me into the trade. So right now I'm in this trade. This is all demo. Anything you see on my, when you take these trades on this is all in demo. We're just showing you how to make the entry. Now, again, I want to see where the C is. I'm looking to see where I have a close above where the C. And you can see this blue candle came up, it closed above it. We waited for a little bit of a pullback. It got me in on the uptick. And these are still green. This is still strong. See how it is on the other time frames. Still strong there. Dollar is still strong by 4 to 3. That's still in the right direction. This one's 3-point spread. This one has a 2-point spread right now. All of our moving averages on the 1 minute are in alignment. All of our moving averages are, right now we have the break of the 62 on the 5. And that's a little bit different. It came up, let's see, this is not the 65 minute. This is the 5 minute. And right now we had when we had the alert, we actually had a blue candle close above the 62. We have the cross of the 5 and 13 down here. And right now we're getting the cross of the 5 and the 13 over the 62. Looks like it could be a nice move to the upside. And here's where the target's going to be up here. The first target's going to be at the A, which you can see right now is right at our 7 pips. If I put our Fibonacci lines on, here's our blue Fibonacci line. It usually goes from blue to blue. I find Thursdays are usually pretty good days to trade. Tuesdays and Thursdays are my favorite days. Nice move up. We got into the trade. Looking for the target. If I go into my 1 minute chart, we should see that there's going to be a target right in that area. My 1 minute. Put my fib lines on. You can see this is where the blue on the, if it's a blue on the 5 minutes, it's going to be a blue on the 2 minute. Here's our 7 pip target. From blue to blue is 7 pips.
You mean blue to green?
Oh, blue to green. Thank you. Thank you, Christine.
Okay. You're welcome.
Yeah, the blue to green is 7 pips. And we need to get I like to get the close above this. Here's our close. Our trend's still going. Right now, I'm looking to move. I don't want to see this thing break below this yellow on the, well, actually, yeah, I can't talk. On the 5 minute chart, I like seeing it track the yellow on the 5 minute. Right now, it's still tracking on the 1 minute. Still a strong move up. Coming up into our target. Moving averages are coming. You can see where this is coming up to the 89. If this thing starts to hook, I'll just close this trade out and say thank you very much. Right now, we don't have a hook. Everything's still moving in the right direction. A lot of times they'll come up just within a couple pips of these target zones. Let's see, we got in right. And our 7 pips is right up in there. And right now we're 5 minutes before the 9 o'clock hour, and which is when the 1 hour candle would close at on the hour. And we're still 30 minutes from the U.S. Market opening. We're still pre-market for the U.S. Let's see if we can get a push up. If it bounces off my target, let's see, there's the target. Boom, there it is. We're done. Thank you very much. Second nice trade of the day. What's the name of the calculator? Basically, it's not. It doesn't have a name. It's our position calculator that we have. We can make it available to. We make it available to everybody. Just have to figure out how to get it to you. I tried putting it into the chat last night, and it wouldn't take it in the chat. So I got to figure out how we can give you these files. Actually, I think what we'll do is let's see if I can put it into the Hawkeye Telegram. See if I can load it into that, and that way you'll have it in there. I think I can do that. Make sure you keep checking the Telegram. And actually, what I'm going to talk to Brian, and I'm going to see if we can have a Telegram channel for AIRIS users to be able to put your charts in. So if you want to have us analyze some of your charts, if you want to draw a wedge and you want us, or take a trade and you want us to analyze the trade that you took to see what went wrong or what went right, we're going to see if we can get, so you can take a snapshot of your trade, and then we can do an analysis of it for you. This was a nice little trade. That was and that was a Canadian. I'm beginning to like the. I don't know about you, Eva, but I'm beginning to like the Canadian dollar a little bit more. It's been a little bit more predictable with our trading methods.
I don't mind the Canadian dollar too much. Just when you get on the wrong side of it, it's a pain in the behind.
Yeah. I think that speaks to all of them when you're on the wrong side of it. I don't care whether it's Euro, US, or Canadian dollar, or New Zealand, or whatever. Take your pick.
Oh my goodness. But my way of thinking with the US Canadian is that generally speaking, the US will always end up being stronger than the Canadian. Even if it's for a short time, it flips. It's not going to stay that way for long. Well,
Yeah.
Unfortunately, I'm on the wrong side of this trade, and the Canadian has been stronger than the US for almost a week now. So
Yeah.
that kind of, and not that it's a danger thing that's going on here for my account, but it hinders me from placing trades while this is going on.
Yeah.
So, I've got to use smaller position sizes and that type of thing. So that's the only thing that bugs me about it right now. But
Yeah.
generally speaking, you know what? There's good movement and all that stuff. And I do like it. And I would actually like to make this my pair, to be honest.
And this is why what I find, and this is from my, so much of trading is the head game. And what this does, what I find helps me is if I just go for my 7 pips, get out of the trade, take my profit, and that way I can clear my mind for a fresh start. When I see a new alert, a new pattern, you're not saying like, well, I've got this trade, I'm already underwater on this trade, so therefore I really don't want to go that way. So it's better to just take the profit, clear the chart, clear your head, and then wait for the new setup, and then just take it, go for your 7 pips, and get out and take your profit, and then wait for the next trade again. Because that way, I don't like going to bed with open trades because I don't sleep very well. I also don't like just setting and forgetting, because sometimes it works, sometimes it doesn't. I would, if I do get caught in a trade where it's getting late at night, then I'll just put a stop in, put a target in, and be willing to accept whatever happens. But I find out that if I can just watch the charts, and I'll sit here and just watch them, and most of the time I'm in it. Like for example, this trade right now, the alert came in at 8:45. By 8:56, you're already done for the day. You already made your 7 pips. So we're looking at, after 11 minutes, you already made your daily bread, and you're done for the day. And just go on, or if you want to be sitting here, just do it into demo. Just keep practicing. See if you can find how to maybe stay into the trade a little bit longer. See what patterns, see what indicators are telling you to say, okay, I can stay in this trade a little bit longer, but see how much you have to give, what's your head game going to do when it pulls back to the yellow line on the 1 minute or the 5 minute. What's your head game going to tell you when you get the crossover of the moving averages when they all bunch together and then it breaks out? And because this is really where the move starts. It started down here before the break, but you need to get the confirmation. Now, there's a couple of things we can do. One, if you're new to this, wait till it just breaks the top of the wedge. If you do this enough times and you get the results from that, you may want to say, okay, if I have the pattern coming down with a strong move down, and I can see where my moving averages have crossed. I can see where I already had the hook down here at below. And I have the hook, I have the moving average cross. Okay, I'm going to take a shot at entering the trade down here. And if it gets up here, it may just bounce, but at least I've got this much room that if it does break again, and you can see where it broke, it came back into the wedge, it came back and retested. So your stop loss is rather from here to here, rather than from up here to the other side of the wedge. That's a good thing. But on the same token, you have to be willing to accept these little pullbacks. You have to be willing to figure out what's a good time to get in. Is it breaking a secondary trend? There's actually a secondary trend right here from the C. Here's a near hit. Here's a hit. Here's a hit. So if I take this down to right there, here's a near hit. Broke a little bit, another hit, and now it broke with a nice candle close above the secondary trend, but that's even before the first wedge. And here's where the alert, but you can also see that you didn't even know this alert was here until this blue candle right here. And you don't, at that point, you don't want to be taking it because you don't know exactly where it's, because up here, if you took it long and now you have the hook, you miss this whole pullback. Now you have to deal with this whole pullback coming in until it hooks down at the bottom. This is a nice little move. Let's see whether you would.
It is. I actually got into it just like a minute ago.
And here's the New Zealand. Here's where the New Zealand broke. You can see where it's coming down, retesting where it broke. Remember I said it came down and this was 9 o'clock. This is 9 o'clock bar. But right now it's in between on this 5 minute chart. It's between this 21 pip move. Got a nice close down. But now we are right in that demand zone that we pointed out earlier. And it still keeps on trucking on down. These are some nice moves here coming in.
I wonder, is anybody else in any trades right now? The U.S. Canadian.
Yeah, did anybody take any of these trades? Did you get your daily bread? Raise a hand or put a yes or something to let us know what you did, how you did. Everybody's quiet.
Everybody's quiet.
Everybody's watching their trades. This one still just keeps on trucking on down.
Janine missed them. She said she missed the trades. That's all right, Janine. There's always trades coming along.
Yeah, there's always another train coming down there's always another train coming into the station.
And Leslie got 7.4 pips on the New Zealand US.
All right, Leslie, good for you. Now, oftentimes when we get these alerts on this, we get the alerts on the 15-minute chart, but once it breaks, a lot of times you can see where, and you can just see where this thing, let me see where the 15-minute chart looks. Dollar is still strong on all the way across. If you're just looking at the tracking of a 15-minute chart, you can see where it's making, here's a low, here's a high, a low, lower high, lower low. And right now, as you're looking at this 15-minute, came over here to see what it looked like on our higher time frame. Let's go to 1 hour, see if we can see it over the 1 hour. Here's where we had the break of the pivot right here. Here's where the next one was, and you see it's breaking right down to the bottom. It's coming all the way over here. Let's see what this looks like. I'm going a higher time frame. 3 hour. Now we're seeing, see all these wicks here? And you see how, oh gosh, boy, this thing is, here's where the last wick, here's a wick, come into a wicks, right there's the bottom of the wick. Here's where the bottom of this candle is, right in there. How are we looking on this? They broke that. So this area is done. This one's penetrated. Now the question is, where will it stop? Come over here. Let's widen this out a little bit so we can see where these bodies are. Here's the body. Not much of wick on that one. I say probably right down there. Here's the body. Here's the next one. So this will be the next area that's going to be looking at, right in there. Come over here. And we'll see what it does. Is there a fib line? There's a fib line right below it. If it comes in anywhere into this area, you're going to start seeing this thing pull back a little bit. This is the next demand zone. I blew through the first one. Let's see what it does with this one. Go back to our 15-minute chart. And we'll see what it does. See what happens when it comes down into this area. See, all our RSIs are all the way down. Nice little move down. You see how it respected it. This is our descending wedge, and this is where the wedge alert came in. Here's where the bottom of it. Even though the alert came here, but you can see how, here's what I was talking about, where you get the alert, and here's where the alert, here's the last candle that was made before the alert happened, and here's this blue candle on where the one that's on this yellow line. That was the one that was forming. That candle opened when the alert happened. That was the alert that's the candle that started to form. It was the beginning of that candle was at 8:45, and in 15 minutes, you can see what in the next 15 minutes after this one, it popped right on up, and then you can see where it came right back down again. And this is where, so this was the head fake. If you use this trend line right here to this candle, we had the alert. You also had this yellow moving average coming in. So everything, the moving averages were still saying it's still a short, but it gave you a head fake coming in. So that's one reason why I don't have a problem moving my wedge to this and using this as my new reference. And I still have, we had a bottom, it hit the bottom right here, tested it, and now it came back through, and this is where it broke. But when I drew actually would have drawn the wedge, I was using the top of this red candle, because it was a descending wedge. I can use the top of this descending because I start with the A at the top where it's descending. I start the A at the bottom if it's ascending. So this was descending, so I started the A at the top, came down to the pivot low, which is basically right here. Here's where the alert came in, and I'm going to flatline this one coming down. And you see that once this broke and is held and came back down in, I'm okay with moving this one up. Because this was, again, this is still descending. So the A is still in play as a target. If it comes back up, I'm still going to be looking at that for it to break. We also have this 62 moving average coming down. So, but that didn't happen. It gave us a head fake, came back down, and now it took it off to the downside. And I see that more and more often with the alerts where it goes into the opposite direction where you think it's going to go, but it just stalls. And gets everybody in, comes in, take everybody stops, and then it just goes strong to the downside, and then you miss the move. You say, oh, you get stopped out. Say, oh man, I just got stopped out. Well, it's sort of like you still hang in there and still stay with the trade until it gives you another entry to either get back in long or wait for the break to go to the downside. But you see where this thing's coming right down. It's coming right into this area and it's starting to bounce. And it'll probably go sideways a little bit, and then it's either going to probably come up and retest, or it's going to be. But right now, that was your trade of the day right there. The other ones we're going to look at. How's the still a Canadian? Let's see where that's.
Oh, it's going up.
It's still chugging away.
No, it is. Yeah, I got my 8 pips on it after you were done.
Yeah. And I said, and sometimes I get a little frustrated that I don't catch those bigger runs, but on the same token, most of the time when I try, most of the time I find out I give it all back, and then I get upset with myself.
I know. I'm the same.
So I've just gotten to where I'm just taking my 7 pips and I wait for the next trade, and if I get my 2% for the day, I just keep playing with. I keep learning. I never stop learning with this. Never stop trying to figure out, is the market changing? If it's changing, is there ways to adapt to it? But you can see right now, it's breaking out of this. It's breaking out of. So now, since it's breaking out of the top here, let's go over to the left and see where the next point of possibility will be, where it's going to bounce. So I'm going to go to a 4-hour chart. I'm going to come over here and see what looks like a good possibility. I'm going to take this off right now. And so it broke out. So we had from this point, if we look at, let me get my little ray here. It already took this one out here. And you can see it's bouncing right here. If it can get close above this line, it's heading up to here. And that's it, 32.55 to 40, that's 15 pips. So if we can get to close, if we can get a candle close on that point, now let's see if there's a fib line that we can maybe put our hat on.
Well, it's right at a 5-minute fib line right now.
And a 5 minute, and is it at 15? No, it's not at 15, but it is at a 5, you say, okay?
5, yeah. Oh, it looks like it kind of went through it just now, but it was struggling there for a minute.
Yep, here's the 5-minute fib line right here. It came, you see where it came on? It came up, couldn't hold it. Now that was sort of like it passed, it checked it, and now it's taken off again. But also see, look where our RSIs are right now on this 5-minute chart. They're all the way up here. I would expect to see this thing start to hook. It still hasn't, we had on this right now, we still have 36 seconds. So this looks like it may close above it. We'll see. It could pull right back. In another 30 seconds, it could pull right back and close below this green line. We'll see what happens. And we said over here on the, where we say that our target was on a 4-hour chart. The next target we were saying is going to be right up here. And you've got some wicks, right? Here's some wicks. So I'll be looking at this as a area to possibly go short again or to get a bounce. Let's see if we get to close on the 15-minute. Let's see. We just got to close just above. Where's our 5-minute chart here? We got to close above the green. And right now we're saying if we got the close above this area, which we did on this 5 minute, actually on the 15 minute as well, it's going to be heading on up to this direction. There's really nothing over here to stop it too much. Put our fib lines on and see where it's going to maybe get some bounces. Remember, these are 21 pips apart on the US Canadian. And every third of the way up is there's a 2 minute. So if I go on my 1 minute chart, I put my fib lines on, you'll see that that 5 minute green one is a 2 minute blue. Here's our 7 pip range right in here. Here's the next 7 pips. And then here's the next 7 pips. So we have potential targets here. And here, these are all 7 pips apart. You see how respected this price point, 32.45? 32.45 to 32.55 is going to be a range because the 50 is right in the middle and 5 pips on either side of it is going to be an area that's going to stall for the most part. That's halfway on a from a dollar standpoint, from 0 to 50 cents is halfway in the middle. And if it can't break the 45, it's more than likely going to come back down and retest something else. Remember, see, we have on the 1 minute, the RSI is already up here. It's already hooked down. You're starting to get the hook on the moving average. If we get a 5 moving average and a 13 moving average crossover, it's probably going to head down to looking at this area right here. Right now I'm looking at a possible wedge formation here from here to here. I'll retest it down here and then move it back up to retest the upside. Right now it made a low, a higher high. This is a higher low so far. And we'll see if it makes a higher high. So right now it's inside of this range. And you can see where it's inside of a 7 pip range right now. It may stay in this way for a little while. But we may get this thing to break this AC trend line, break it, come back and retest it. That's the blue line, and come on down to the red. This is just a projection.
Market opens in 10 as well.
Oh, yes. And what we could do is we could take a break. Let's take a 5-minute break. That'll give us, we already had the 9:15 candle, so we don't have any new alerts, and we may get another alert at 9:30. So let's take a 5 or 10-minute break, come back by 25 to 38 minutes after the hour. I'll be here at 25 after the hour. And wait and see what happens if we get an alert on the 9:30 bar.
Sounds good.
Sounds like a plan.
Grab a coffee, everyone.
Yep. Thanks.
I'll pause the recording and go on break here. So stop sharing, put the right one on. Share my screen. And we're going to go on break. Okay, I'm back, and we're waiting to see what happens with this next. If we get a alert with the 9:30 candle. Let's see what the as we're looking at this dollar CAD, it came down, hooked. We're starting to get the moving average crossovers. Didn't still respected the 62. We'll see if we get a close above the D. It might be a chance to get back into it again, or to see if it's going to retest this area up in here. It never did get up to that area yet. We didn't get a close on the off this D area that we had a little pivot. We had low, a lower high. Now we're getting a higher, a little bit lower high again, reference to the B, but it's breaking up above the D part. Didn't get a close yet. If we don't get the close, I'm going to move the D up over here and wait for it to come back down and see if it gets to close below this C. So right now it's kind of range bound right now. You just have to wait and see what it does. See where our strength is. This thing's coming on up. Now from where, if it breaks and closes above the D at 32.40, it's only got 5 pips, so I guess it has to get through this B part then. That would be your target. That's only a 5 pip target. It could be a little bit of an early entry, but nice little pullback. Now, if we get a hook with this, then we could possibly get in, see if it takes us out. At this point, you could be looking at a possible buy stop of 32.39. Dollar's still strong on that, so we got a buy stop. Take profit loss. And we're looking at 32.39, and we would have to be, so 39, where's our sales asking price? I don't want to see it break through the top of this, so 39.4. And more likely, I think it's going to come down and retest the 62. If it breaks the upside, I wanted to have the 62 be where my stop is. And we're in the trade. C comes down here. Pretty much still maintained where the C was. Still maintained this trade. It broke out of this. Hooked back up. Still not happy yet. See, this is where you can get into trouble. We're trying to get these a little bit of a high. So here's our anchor. Here's the midpoint. If it comes up and tests this without breaking, then I'll be out of this trade.
Now, do you think this might just be a pullback on the larger time frame now?
I think this could be a pullback, but on the same token is this thing could pull. We don't know how deep it's going to pull back. I would I like the idea that it was, the reason why I was willing to take this is because we had the hook and the crossover of the moving averages, but part of the problem is it hasn't tested the 62 yet. Move this down just a little bit. I don't want to get stopped out right at the bottom here. I'll give it an extra couple pips. But right now, we're looking for it. Does it close below the C right now? And there we probably will get that. This one didn't close. It's testing the bottom of this wedge that we drew here. Now, this is not a wedge alert. This is a secondary wedge after the alert. The alert was all the way down here. Now we're just seeing if this is going to be a pullback in order for it to keep on going up, or did it make its target? Remember, we were looking at a 4-hour chart and said this would be the next supply zone where it would be coming down. We're only 48, we're only 10 pips away from that zone. This is a rather aggressive move in this part because we're already up so close to where it already had such a strong move up. Now this is a question of whether this is going to be a rally basing and then go up to even higher, or if this is now going to start pulling back. Right now we can still respect the 5-minute yellow 62. I'm on the 5-minute chart now. So I want to keep my stop away from that. I'd like to see a little hook on this one right now. I think this is basically, right now, it's looking like it's a pullback. Again, we just don't quite know how deep it's going to go. It did break the C part, but we're still looking at a bounce off of this. And we're also looking to see where our Fibonacci's are. This one's all the way down here.
Al?
Yes.
Because this one you're doing like a little bit more aggressive, would you still continue monitoring on the 5, or would you go and do a little bit more on the 1?
I would probably do, well, actually I do both. The fact that it violated the 1 already, I'm resorting back to the 5 and seeing if I want to see if my stop is still within reason. Remember I say a lot of times, once I'm in the trade, I want to be monitoring the yellow 13 exponential moving average. You see how it came right down to that and just stopped? I want to keep my stop below, because I don't want to get stuck. On the 1-minute chart, you can see right now the 13 on the 5-minute is pretty much the same point as the 62. I wanted to keep the stop below that because I figured that we had a nice little hook. This is kind of like from a Elliott wave standpoint, we had nice high up here. This is the ABC retracement. You usually have 5 waves going up, which would be this wave here. 5. Let's see, 1, 2, 3, 4, 5. Here's the 5th wave up. Here's the ABC retracement right down to the 62. And now I'm going to be looking to see if it's going to come up and retest this area.
Okay.
So here's the first leg down, second leg down, third leg. So A. So there's an A, B, C. Here's the test. So I'm going to move this down to here. And now I'm going to see if it breaks the B. This is almost a classic Elliott wave, actually. We have an anchor, a hit, and we'll see if it comes up here and tests this. If it tests this and it falls back, I'll probably just bail in this trade because right now we're getting these are consolidating. My stop is still okay. I did give a little bit more room. We did have the hook all the way down here. We had the hook, and now it's starting to come out of the 60 area. Here's where our entry was. So we had to take some heat on this one. Now we'll see if we have, okay, this one was respected. And now we're starting to see if we're going to get the secondary cross.
It's looking good.
It's looking good so far.
The RCS really got strong. 7-1, 7-2.
Now the thing is, now if this thing comes out, tags it, and pulls back, I'll just probably just bail with a small loss on this. I want to see it break this BD line.
Right. Which it looks like it probably will.
And hopefully it should close above the D again. Because really right now we need to have it close. But if I were to move the D down here, whoops, if I move the D down to this point, here's my anchor, here's my middle hit, here's my end point. Now I want to see it break, close above that. If it doesn't, if it can't close above that, how much time do we have here on this 1 minute? We're on a 1 minute chart. We have 36 seconds still. You see how it respected this? Had a nice pullback.
Ava, your pair's looking good.
Now the question here is we have it looks like we're going to get a close above the D, but remember we got into this trade with looking for a close above this pivot right here.
Close just shy of.
It should close just shy. This thing closes, I'll just bail on this because things aren't looking quite right. It should be able to break that. I'll give it, if it comes back down and crosses, now I couldn't let it test this bottom trend line, but now we actually have a secondary trend, which we're looking at up in this direction.
Okay.
See if I can, we have an anchor, here's a hit, and we'll see if it's going to come back. This is our box that we never broke it. Remember we drew this white box
on the
earlier
4 hour?
On the 4 hour. Remember we drew that box from the daily range. Here's the bottom of the box, here's the white box, and it broke that and it came back down retesting this area. So this is a retest of that whole range. And now the question is it going to respect it or is it going to break? If it comes back in, I'm just going to bail on this. The fact it didn't close above this pivot right here is a little concerning. Here's our new box. Here's a high. Here's a lower high. Here's a higher low. Had another crossover again.
So you wouldn't even give it time to go down to the 62?
I think I'm going to have to because, I mean, right now it's still, the 62 is still pointing up, which is a good thing.
Right.
Let's see where we are on that 5 minute chart here. See if it's respecting the 5 minute 13. It's still pointing up, but I don't like this big old red candle like this. It came down, tested it. This is where it's sometimes better to just stay on the higher time, the 5 minute, because you're still getting a lot of price action in here. It's just basically it's basing right in this area. It just can't decide if it wants to break through or go up to the top. It's sort of forming its own new little box right now. And the range isn't all that extensive. It's about 1345 to, I'll just say 30. We're looking at about a 15 pip range in here. So my stop is down outside the box. I'm going to flatten this out. And actually, if we get the close below the C, it's probably going to take me out here. Then I'll be out of the trade. And I'll be looking for a bounce off of this area. There it goes.
So you said now you're looking for a bounce off the 62?
Now see if it bounces off the 62 on the 5 minute. I was skeptical up here when it couldn't close above where I had the D up here originally.
Right.
On this one, I was a little skeptical when it couldn't close above this level. Came right up, tagged it.
Now the wedge that's below that wedge, is that the very, very original wedge?
This is the original wedge where the alert was. Yep.
Okay.
And it could come back down.
Nice.
It could come back down and retest the top of this.
Mm-hmm.
But you can see it was a strong move. But the thing is, what I'm looking at is that it couldn't break above 1345. It couldn't break above that. So right now, that tells me that this thing's going to go more short here.
Mm-hmm.
But we already had our profit from this trade right here. This is where we say, try not to get greedy. Take your profit, put it in your pocket, and then go on for the next trade.
Right.
Any new alerts? No new alerts.
Mm-hmm. The I don't know if you want to look at it. The USJPY, it was, I think that was a descending that came earlier.
Yes.
Let me. You want me to look to see what?
Yeah, let's see. USJPY. It was ascending at 7:15. Ascending at 7:15.
Can we look at that?
Yeah, we could do that. Here's 7:15. And here was the alert. It broke down to the bottom. You see where it broke down the bottom? You got your 7 pips on this and then some. Came back up. Now it broke the top of the wedge. And right now it's, this trade was done when it came back up. And this one's kind of struggling here. But this was the trade. Here was the alert.
Right.
Here is the trade. Now this one's actually, I mean, I'll keep the wedge on here just for reference, especially if it breaks up. A lot of times this thing will still be worth looking at.
Mm-hmm. Okay.
Let's see, how are we going today? We're going to, yeah, we need to be done by, let's see, Catalina has a session at 10 o'clock this morning, so we have to be done in another, but we need to be done now. So
yeah. So
anyway,
another day.
So we're going to have to shut this thing down, and because we have another Catalina is going to be doing her session here pretty soon. So I'd like to thank everybody for coming in. We're going to stop stop the recording.
Thank you all.
And thanks everybody for coming in, and we'll
Thanks,
see you
everyone.
tomorrow.
Have a good day.
Have a good day, everybody.
Thanks, Eva. Thanks, Christine.
Of course. Thank you.